Hey, this is Josh Taylor with Trade Advisor Pro, and I want to thank you for checking out our video today. Now, before we get started with today's free Forex training video, I want to give you a chance to pause this video right now and go to our website. Trade Advisor Pro offers you free Forex training videos, and trade alerts. And folks, you do not want to miss our trade alerts. We send out a bunch of trade alerts every month that are top rated in the industry, where we send you our exact trades right to your inbox. Pause the video now. Go to tradeadvisorpro.com/free, and all you have to do is register and then come back to this video, and we'll be sending you a lot more goodies to help you with your Forex trading. Enjoy today's training video. Alright folks, it's Josh Taylor, and we're going to go through a bunch of charts today, basically doing the market preview for the week of October 15th, 2012, and this is the Forex market preview. And the first pair we're looking at here is the New Zealand dollar yen. Now this is off the daily chart, and you can see here that since June 1st that we've pretty much had an uptick, that prices continued to move up. We've had higher highs, up, and higher lows, which is indicative of an uptrending market. Until recently, however, which is, let's see what this candle here is. Right around this time we had a pretty strong rejection wick around the September 19th, and slowly but surely, though prices continue to move up on the bottom, this level here, the 63.77 area, 75, 70-ish, all in this area, we seem to hit a base. You can see that even though we've continued hitting the base, that price is now on a daily, off these daily candles, is continuing to push down. We've seen pretty strong rejection wicks, and prices consolidating into you can tell here that these wicks are getting smaller and smaller and smaller. The candles are getting smaller and smaller and smaller, and they're kind of wedging themselves into this little triangle-based pattern. So what we're going to be looking at, I'd be very cautious on trading this pair. I did take a trade off of this a few days ago, a long position for our ProSignals Direct and our Mirror Trader Pro trade copier customers, but I'd be very careful. I'm not really sure what this pair is about to do here, because it's showing signs of both. You can see long-term uptrend, but short-term we're getting a push to the bottom, which could be either selling pressure or the lack of buying pressure. We're not really sure. So what I'm going to be expecting here over the next few days, a breakout of some at some level. So I'm going to be very cautious on this pair for a little while until it determines whether it's going to break north or south, and then we'll come back and look at that a little bit later. Or here we are at the EURUSD. Now here's what we've seen here. This candle, starting right here, began the beginning of an uptrend, which was July 24th, 2012, which this pair is basically run up about 1,000 pips in a little less than 2 months, about 7-week period time frame. And you can see here that we had this trend line, and price was continuing to move up this trend line until the 7th of September, when price literally just shot through the roof. Okay, and we usually, when you have a very strong break up to that point, we are going to see a retracement and a pullback, which we have seen. Price has been basically now in a semi-consolidation period level here for the past few weeks, bouncing between the 128.50 range to the 1.3000 range. But here's what I am expecting in this pair. You can see that price did slowly try to break out of this trend from the original trend, and then broke back in. I am expecting that price will pull back, what we're hoping for at least, anywhere from the 129 level to the 128.50 level, where I am going to be interested in a long position, because I think the way that price is wedging in here on an upward trending pattern here, that price is going to continue breaking up, especially because of the fact that we have serious US dollar weakness, and no matter how much our current government continues to lie and say that we went from 8.2% unemployment to 7.8 in a matter of a month, which is a crock of crap, everybody's realizing, especially traders out there in the market, realize that it was a bunch of fudged numbers and lies. So what am I expecting here is price to pull back a little bit. We need a pullback. If we buy in anywhere in this range here, you're taking a chance. You really need to buy close down to the trend line or below, because this 128 base or 128.50-ish base in that area. Wait for a pullback. Set your stop down in this area here, and watch this thing jack up. Another thing that could happen is that we may not get the pullback because we're at 129.51 right now. If price breaks through this level and holds, we need a good candle or two to close above this level. Then I would be waiting for a pullback down to 1.3 as a retracement. Take a buy position there, and then let this thing shoot up. I do think that if price does continue to break up through this range, that we are looking at the 13300 to 13400 range as a potential move up. So let's go to the next pair. Folks, I hope you enjoyed today's training video. If you have not done so already, stop this video now and go to tradeadvisorpro.com/free and register absolutely free for free Forex training videos, and free Forex traded alerts directly to your inbox. Go to the website right now and register for free. All kinds of goodies for you. Thanks a lot.